All right there, everybody. Thanks a lot for joining me as at this Wednesday afternoon market recap. A few things to point out which have again set up since that Monday afternoon market recap, where again we started to make some of this information public as to what we were expecting these markets to essentially do over the coming couple of days, if not couple of weeks. Now, it has happened relatively quickly since that Monday afternoon market recap. Let me just show you that of the NASDAQ today. Very interesting. Actually, yesterday, in fact, being Tuesday, we got this doji candlestick. It was the first time that we came on up and actually tagged 7,998 on the NASDAQ Composite Index. Okay, so we essentially hit our target yesterday. Today, however, we actually gapped on up above it. It was looking very good. However, what we have essentially done is printed that of a hybrid bearish counterattack mixed with that of an engulfing candlestick right at this psychological round number being 8,000. So again, just working with that psychological round number, not to mention, of course, the resistance going all the way back to late 2018 in the months of August and also September, October. This makes a lot of sense that the markets themselves are going to slow and essentially set up potentially that of a correction, which is going to offset the gains that have been priced into the market really since from the 26th of December 2018. I would say that a portion of this percentage move, all right, probably close to 38%, all right, being that first Fibonacci area that traders would generally look for, is going to allow this market to essentially shake out potentially, all right, this is potentially at this particular point, we're not essentially bearish whatsoever. In fact, we've just really banned ourselves from actually putting on additional long entries on this market until the market corrects. But really what you want to pay attention to is if this low is taken out over the coming weeks or months, and then of course, well, where is that next opportunity to re-enter into the market? What I've been speaking about is the ADX itself. Now, what we didn't see today was the ADX turning down. In fact, somehow it is still turning up. The commodity channel index is still printing firmly above 100, but pay attention to this indicator here. If you see this roll and if you see it take out this little dip over here, this little sort of higher low, so to speak, on the actual indicator itself at the moment, you can see it has clearly turned on back up. But again, if we roll and take this little swing low out, that is essentially the reset, which is going to correlate or align, overlap, you could say, with the actual correction. That makes a lot of sense given, of course, when we have a look at just how overbought and overextended, overheated essentially this market is to the upside. It has been roughly now 4 months, right? Almost 4 months on the dot since the 26th up to where we're currently trading, where the markets haven't actually gone through a pullback. It is very rare. If you pay attention to these oscillators, you can see that they are on the precipice of actually turning down. I wanted to make one thing very, very clear, however. All right, and again, that is, we're not calling a macro market top. If you see this market retrace, if you see it sell off, naturally, you're going to see a lot of headlines as to things like a triple top or what you could deem to be that of a head and shoulders. At this particular point, though, we assume it is far too early, far too soon to actually give that all that much credit whatsoever. We're going to be paying attention to the rising 50-day exponential moving average, first of all. Whether or not we actually break through the 10 and the 20, of course, we haven't actually done that yet, but it does look as though based on these candlesticks, all right, and the gap theory that I've mentioned in that pro analysis class, that the probabilities and the odds are starting to favor that of a natural correction, a correction which is somewhat overdue. Now, again, really starting off really the first session in the month of April, we picked up on it just here, and we were really identifying, well, is this some form of a continuation gap? Are we going to close the gap? All right, asking questions like that. And most recently, this is taking us back to Thursday and Friday of last week, we got another gap up. And immediately when I saw this up and around resistance, we were speaking about the potential, or the likelihood at least, of this being that exhaustion gap prior to essentially a Japanese sort of a dumpling top, all right, sort of a curving rolling top, which then would lead to, of course, that correction. Now, if we fast forward 3 sessions now, as at the close on Wednesday, we got that sort of hangman candlestick up and very close to an all-time high. We have a little spinning top candlestick yesterday. Today, however, a little bit different to that bearish counterattack. We have that of an engulfing candlestick on the S&P 500. So again, although we haven't done, right, as at the close on Wednesday, any technical damage whatsoever, I wanted to state that very, very clearly. We're not below the 10. Right, and obviously if we're not below the 10, we're not below the 20, nor are we anywhere close to the 50. But these are the types of signals, right, these gaps which fail to continue higher, the early bearish reversal candlesticks being up and very close to all-time highs, right? The Nasdaq more or less hitting that 8,000 psychological round number and immediately seeing a reaction off from Wednesday's trading session. These oscillators, again, if I can flick on over into the S&P 500 being extremely overbought for a prolonged period of time, again, doesn't necessarily mean they need to turn down first thing tomorrow, but it is a warning signal in and of itself, all right? You can go through, the list is endless, and if you pay attention to the ADX on the S&P 500, it has, pardon me, actually turned down. You can see that very slightly, right? Made the high, and really what it appears to be doing is starting to set off, or at least moving back down very early on in the reset back down towards the 20 area. So pay attention to that. If you see the ADX collectively crash, okay, across the board, if you see a sudden drop in the ADX mixed with a long day dark Morobozu type candlestick to the downside, breaking, of course, that 10 exponential moving average to begin with, all right, well, then the writing is on the wall, as I've warned about in the past, for these markets to move into that of a natural correction since December 26. All right, it's been 4 months. It's been a quarter of a year since Christmas already. You need to be aware. You have to be conscious of this sort of possibility or potential sort of playing out, because what I would say at this particular point is, although we have been net long on this market rising since the retest of these primary bullish trend lines on the S&P and the Dow Jones Industrial Average to a lesser extent, most of our trades have been on the S&P 500 when it comes to the actual directional index plays. All right, but when it comes to this move, being very bullish and taking advantage of it, you've been given a lot of opportunities to actually close out the positions. And going back into my original chain of thought, I would say that the probability, in my opinion, is higher of the market actually going through a slight retracement immediately, more so than the markets actually breaking out above their respective all-time highs and just continuing to trend further into 2019. I do believe we are going to close much higher than where we currently are. As at the current juncture later in the year. However, before we do that, the market should give you potentially another opportunity to leg in, all right, for those long exposure trades, upon which you will then reap the benefits as the market continues to trend higher further into 2019. Pay attention to the exponentials. Pay attention to these oscillators. Most importantly, pay attention to the ADX and the CCI, okay? And not so much the Bollinger Bands at this particular point. Also, what you can sort of look at as to the first sort of target. I know this isn't going to correlate exactly to 38.2%, which is that first major sort of fib level that people will pay attention to. Then, of course, you've got the 50 and the 61.8. But roughly, these simple moving averages, where they are, it would make a lot of sense to see price action come on back down to retest them as new support prior to the market, of course, taking off and continuing to the upside. It's not only true and evident for the S&P 500, it is also very much applicable to the Dow Jones Industrial Average. You can see it's coming in between 25,000 and 25,300. And on the NASDAQ, you can see that 100 sloping up aggressively now as it factors in more of these most recent, or at least the 100 most recent days of price action compared to where we were over 100 years ago as we continue to move forward. But you can see this is really starting to curve. It's getting a really nice slope to it. And this is going to most likely in about maybe 3 weeks or 4 weeks, it should be more or less back up to where that 200 simple day moving average is as well, which is sitting at about 7,500. Just to remind you, we're at 8,000 at the moment. And to see a move of less than 10% down to 7.5 makes a lot of sense to shake out those oscillators and to allow these markets to have a little bit of a breather. Now, very quickly, I wanted to just show you IBM. IBM reported it gapped to the downside. However, what we do have is a white candlestick. This is giving us the ranges of potentially both a long and short trade at the moment. What would be most interesting is if IBM sold off a little bit further down to about 133 in alignment with the overall markets, and then we started to see, all right, some true sort of white candlesticks show up as we move into oversold short term. So pay attention to that. Not a trade that you immediately want to sort of gravitate into. Netflix is relatively unchanged at the moment. All right, it has been rather volatile. We did see a little bit of a sell-off, especially into Monday. We saw a little bit of a flash crash. It bounced on Tuesday. However, we do have another outside day engulfing candlestick. This is coming after earnings as well. So, I mean, those two stocks have reported. Outside of that, we've got Google, which is continuing to the upside, 1212 and 1191. We do have earnings upcoming on that particular stock. Disney obviously had a massive gap up last week. It's holding this area. It looks to be forming that of a stair-step type of pattern. However, again, we are assuming that risk is off on the markets, or at least the transition from risk on to risk off is happening more or less at the current juncture. And we are going to see, obviously, the consequences of that at some immediate future date. Whether it's this week or next week, time will tell. But again, if you're looking to jump into long trades at this particular point, understand that it does come with additional risk. And when I say additional risk, I'm talking about a material right, amount of risk on top as to what you generally would trade, just being in general market sort of trending circumstances like we have been over the past 4 months. I think we're very close to the end of that move. COP, more or less holding up still at 66.82. We still haven't seen that pop like we have, or at least what we're experiencing right now on Caterpillar. 135, 136. It's all the way up here at 142.74. This is a good opportunity to actually take this trade off. All right, we were speaking about this over the weekend. Dash dotted line. If we were to get back on up or see a pop, take profits. And really, that's the name of the game right now across a bunch of these individual stocks. Boeing Airlines, again, back up to 382.90, which was the original entry. It sold off a little bit today, but all of these earnings announcements, these vertical lines on my screen are reportable dates confirmed through Earnings Whisper, whereby we are going to have those reports. So you want to close out of any original trades or existing trades that you may have open. Now, the final stock is Apple. Apple saw a little bit of a pop today, up just under $4. But again, with each and every session, we're moving closer to the reporting date, which is scheduled for the 30th of April. So again, another opportunity to call those positions at, say, 178, 188, or even most recently at 198.30. A little bit of a surprise packet here for Apple, as that some of the market data and price action that we did see as at the close on Wednesday. So think about that. We've got these open windows, multiple open windows. We've got the circumstances are really ripe for a retracement on a number of levels. I've been sitting here giving you a warning, and people in Pro are warning for a couple of weeks now. And again, until these markets definitively break above their all-time highs, I'm struggling to find the conviction, so to speak, to be legging into new positions. Instead, again, managing existing positions, putting some of that profit in your back pocket, and more or less just waiting for the next opportunity, either at lower prices or at fresh new all-time highs. One of these sort of scenarios is going to play out, whether you're going to buy at lower prices or buy on the breakout. Now is the point in time where you simply sit back, allow the market to sort of knee-jerk everyone, allow volatility and the potential or the likelihood of whipsaws to go up, avoid it all yourself, and then just cherry pick the right opportunity to re-enter the market, which is probably going to come maybe as soon as the final week in April, if not most likely into the month of May. All right, that's the way technical swing traders are looking at this market. This does not interest, all right, seasoned swing traders. This is the period where, again, you allow the market to be a little bit flaky, and then, again, to sort of jump in when the occasion is right. All right, so on that note, everyone, I'm going to say farewell to you. Thank you for watching this Wednesday afternoon market update. Any questions, email me, success@pivotpoint-trading.com. All the best. Goodbye.